What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with an AVCT raw price action update. Before we get started, please make sure to subscribe to the channel, like the video, share it with a friend so we can get some more people in here who want to learn about the trade. With that said, let's begin. Okay, you guys, we're looking at the daily chart here for AVCT, and as we spoke before, just a few days ago on the analysis that we made on YouTube, we are still within, of course we are, this is a massive descending channel. We're still within it. We're still within a pretty good demand zone down here, and there are a couple things that we should note. There is a gap up here at the range is actually 315 to 395. So this is a pretty good area for us to want to take price action. The channel itself is a reversal signal of trend. So this is a good thing. If you are new to the channel, if you're actually a returning viewer, you'll know that I talk about the golden rule of three often, and it's particular to formations like this. The golden rule of three is where we use the resistance 3 times before we retrace for an accumulation period and try for a true breakout on the 4th test. As you can see within this formation, we've actually only tested it twice. So I do expect to be within this channel for the coming weeks, even potentially of a couple months, since it is the daily, and this can likely take some time to resolve unless we just hit some price action like this, and then we hit test number 3 and then come back and accumulate just as fast as this happens. So as you can see, AVCT is very much capable of doing such atrocities, right? Okay, so let's go ahead and move on to the next chart. Okay, so within this large descending channel, this is the descending channel, we are within another descending channel. So now we're looking at a smaller time frame. This is the 8-hour time frame, and particular to the 8-hour time frame, we see another gap, and this gap has a space between 340 and 404. We are at what could be a consolidation here. And we can gain a bias in direction soon enough, but we can we just have to look at a few things in these time frames first. Let me look at the notes and make sure that we are well within what we on the path that we need to be on. Okay, so there are a couple curious things here. The range for this gap just so happens to be confluent with the range of the 1 spot 272 and the 1 spot 618, which is our golden mean, the golden ratio. It's funny because the 1 spot 618 is used in natural sciences, is used in art, in the trading world as well. This is known as the I just said it right now, guys. It was the golden mean. So psychology tends to want to go to these sections here, even the inverse, not 618, and its higher targets, the 2618, 3618, and the 4618. So yeah, I found it curious that this gap, and based on the price action that's happening right now, happens to land right within the ratios of this Fibonacci retracement tool. Okay, let's just go ahead and move on. We're gonna go on to the next chart. So this is a daily chart, and on our last analysis video, I said that we were likely to face some downside based on this candle structure right here. So what you're looking at here is a bearish engulfing. So that happens when the body of the following candle engulfs the previous candle. And as you can see here, there's red above there and there's red right below the green here. So this is a typical setup, and especially since we're looking at a daily chart, this is likely to happen. The higher time frames carry more weight with candle structure like this. Now, I do follow candle analysis, but I would have to back it with statistical measures, with some other raw price action things like indicators and stuff like that. So we were actually in a bullish setup when this print happened of this bearish engulfing, and I said that we have to be real careful and use some risk management and stop losses, because this is a daily print and it's likely to realize to the downside, and it since has gone to the downside. Another thing to mention here is that we have printed a daily spinning top doji. This candle here is signifying a tie between the bulls and the bears, so that shows us indecision in price action for the next day on the daily chart, particularly to the daily chart. So, but because it is a higher time frame, we have to give it some weight and and move accordingly. So let's go ahead and move on to the next chart. So we are looking at here at a few things. I'm sorry that it's a little saturated, guys. I promise you it is for a reason. I will show you guys what I am trying to do here. So this indicator down here is called the ARC whale spotter. So this is the ARC whale spotter because ARCa, right? So we have Crypstex, which has essentially partnered with me and pretty much endorsed me, and has since created 8 customized indicators. And they're all for trading, a trading strategy that's likely used more in the scalping realm, in the momentum realm, day traders, right? So I wanted to bring this up right now because this is signaling something very important for us, and we're in the hourly time frame here. So this indicator consists of several different factors. So this red line is VWAP, that is a volume average weighted price. We have this indicator here that is a money flow index, which is interesting because I don't see a lot of indicators having money flow. And what we're looking at here, when it starts to print this light blue haze along with the average moving towards the upside, is showing that money is actually coming in. The green ball at the bottom is actually a bullish signal, giving us an indication that there is potential upside coming. And not only that, but a little bit more of candle analysis here. At the bottom of a downtrend, when you print a bullish hammer like the one here, that also signals a potential reversal in trend. The whale spotter has a RSI built into it, a relative strength index, and it has printed this green line here, which is showing us, I'm sorry, you guys, that's actually some sneezing happening in the outside. If you can hear that, I do apologize. And my toddler is also going a little nuts in the living room outside. I am in the studio right now. So this green line is actually a print of a phantom drive of bullish divergence. And phantom is because this is going through all this price action, and it looks a little hidden, which is why they call it a phantom drive, but it is there, and it likely could start to play out soon. And all of these indications are showing us that there is a bullish move on its way, right? So there is also, this is the ARC sniper. By the way, you guys, these indicators can be available to you. All you have to do is just send me a message on either Discord or Twitter, a DM preferably, so we can go ahead and talk about the details. Along with you acquiring these indicators, I will also include the ARC BBWP, which is volatility, and the ARC RSI, which I will explain in the next few minutes. But yes, you guys, I'm gonna go ahead and pull up ARC Sniper now, and this this is a Bollinger Band based indicator with trends and sell and buy signals. So we have a short signal, long signal type of indicator as well. We are receiving a long signal here. And as you can see, this long signal was fired, and then we moved all the way to the top. We have a short signal here, and it went all the way to the bottom. So this is a pretty good tool to use for confirmation in trend as well. So one more thing to note in this, actually a couple more things to note in this chart, is the fact that we have this because we have a low down here and we have a high up here. This can be considered a bullish pennant. So this pennant signifies, signals a potential upside incoming, which is confluent and which is in accordance with all of the other signals that we've been touching on. Now, there is an implied price objective for this formation as well. So we take a trend line from this, from the hypotenuse, from the top to the lowest point of the triangle itself and apply it to a point of breakout. So this is that trend line. If we were to break out on the 28th of October, the trend line is suggesting a top side of about $1.46. Let me put a trend line there, so that we can see what it's referring to. So it's coming up to this $1.46 area, which just so happens to be the bottom of these two hourly candles here, and it also is falling right in between our gap to be filled here. So the reason why I don't have the range all the way to this candle here is because of this candle. So this is the true range of the gap to be filled, right? So it's interesting that the pennant is giving us this formation here. Now, the other formation that this can be considered is this is called consolidation as well. And the reason why I'm giving you both names is because this is considered to be done after an uptrend. This is starting to happen after a slight uptrend. So this is why I call it a pennant, and also consolidation. Consolidations in this form are bullish as well. So we have two formations that are also giving us a bullish signal. And not only that, you guys, if this is our target just based on this triangle, if you can take a look right up here for, I mean, I'm talking about 4 more cents up and we have our not 618. So our inverse golden ratio, the golden mean, of course. So there's a potential to where we can wick up to this area, thus covering the gap, realizing the pennant price objective, and using the new resistance of this gap as a support before a continuation to the upside. Let me look at the notes here and see if we are on the correct path. Okay, so we are good to go for the next chart here. Okay, so this is the 12-hour chart, and let me just make this a little easier for my eyes, you guys. My apologies. So I want to touch on something pretty large here. So we have a 12-hour print of a phantom drive of bullish divergence. So this is the other phantom drive was actually done on the hourly. So that is for immediate term upside. So this is actually signaling a potential upside for the coming days because it is a 12-hour time frame. So we have a bullish divergence and it is a phantom drive. So this, and also our RSI on the 12-hour is pivoting towards the upside. So this is a pretty good thing, you guys. So let's go ahead and get a bias in overall direction by opening up a multi-pane here and looking at several time frames of our RSI, starting with the immediate short term. So we're looking at the 30-minute RSI here, and it looks like we're rejecting the bull. The bear strength percentile. Sorry, you guys. Let me go ahead and explain this to the new viewers. New viewers, please pay attention. This is a typical setup of an RSI. The entire RSI has, I've split it into two sections, right? The bottom half being the bearish control zone, and the top half being the bullish control zone. We have bull strength at the upper half, and we have bull weakness percentile at the lower half, and inversely we have the bear weakness percentile, and we have bear strength right down here. Anything below the 30% is your typical oversold. Anything above 70 is your typical overbought. So in case you hear me talk about those references, you're not lost within translation, right? Okay, so we have recently made a cross above the moving average being this reddish pink line, and we are now approaching the shallow areas of bear weakness. So when we're in the shallow areas, we can't give too much credit into coming back into its strength partner, because we're likely to be gravitated into the other side, and inversely, and likewise, inversely as well. So if we were within the bull weakness in this area here, we're likely to gravitate down to here. So if we get stuck in this area, BBIG is actually experiencing this right now. We're stuck within this area right here, just up and down this weakness zone. So anyway, back to the topic right here. We are trading above the moving average and entering the shallow areas of bear weakness. So we're likely to come up to the top. Let's look at the 15-minute RSI and see what we got. 15-minute has also made a bullish cross above the moving average and is absolutely primed to enter the bullish control zone. Let's go to the higher time frames here. So this is bi-hourly, and bi-hourly is direction neutral. The only reason that I would suggest possible downside by mid-morning or mid-session tomorrow is the fact that we're so close. We're in the deep areas of the bear weakness percentile, meaning that this can likely fall into bear strength. Before we call such things, let's go ahead and just take a look at a few other time frames. 4-hour RSI is within bear strength, and it is primed for creating a bearish cross below the moving average, to be exact. Let's move on. This is going to be the 6-hour RSI, and the 6-hour is suggesting upside from a shallow area of the bear strength percentile. So this is we're trading below the moving average, so we could actually use the moving average as a rejection point and continue on to the downside, but there is an upside pivot within the weakness. Within the shallow areas of bear strength, which usually indicate that we are prone to going into the bear weakness percentile. Let's move on and take a look at what we got on the daily, since we already saw the 12-hour. Daily time frame is also direction neutral. It's within bear strength, and also at the very shallow areas of it. So this can actually recover soon. Bi-daily is giving us neutral direction again. My goodness. Okay. We have a slightly neutral direction on the 3-day as well. You guys, there is a lot of indecision here, which is very confluent to what I showed you guys on the let's go back onto the daily closure. This indecision candle of the battle between bears and bulls is not solidified just yet, and our indicators are suggesting such things as well. So what I am noticing here is that we can face some bullish action in the immediate short-term time frame, likely in the early pre-market, followed by some sideways price action, maybe some downside, before we can continue on to the upside and realize the higher term time frames, like the 12-hour phantom drive of bullish divergence that we saw right over here. Sorry guys, I just have to make it a 12-hour. There we go. Yeah, like we were seeing this. It is gonna take some time, and not to mention that usually these triangles tend to start to realize to the upside when they are more or less 75% or 70% full. We're at about a good 65%, so I would consider maybe around these areas here as a point for breakout. So if you guys, I'm not a financial advisor. I can't actually advise for you to buy or sell any asset. Take whatever I do say within these videos as a form of entertainment. Do your own DD, right? And we'll be okay. So if you guys are considering entry. I actually personally wouldn't. Until we do get some further confirmations. As you can see here, the 236 is. I'm going to draw a trend line so you can see this here. Here we go. The 236 can serve as a point of resistance so that we can break out of the channel and come back and test our newly converted resistance into support before a continuation to the upside and realizing our formation objective of about $1.46. This would happen in the coming days, potentially a week or two. But, you know, sometimes these sporadic markets can actually make these things realize in a day or in a session. So please use risk management, use your stop losses. Stop losses are there to make sure that we can continue and survive for the next trading session. Anyway, you guys, that's going to do it for the video. Make sure that you do subscribe to the channel. Please visit me on Twitter. I'm gonna leave the links below so that you guys can be able to join the Discord as well. If you have any other questions regarding this analysis, don't hesitate to reach out to me in those areas. But yeah, that's all I have to say, you guys. And okay, I'll catch you at the bell. Adios.